Hi there. My name is Scott Marker, and I am the franchise owner of Network in Action, which is a franchise out of Houston, Texas. And I'm the first franchise owner here in the Treasure Valley. It's a once a month professionally led networking group, and the members are all local business owners or decision makers, high caliber in the local area. So what I'm trying to do is I've come up with this Treasure Valley quick tips here in Treasure Valley, Idaho, and bring in experts in their own individual fields to pass on some quick tips for to help out individuals in in these challenging times. And so today I brought in Devin. So Devin, tell us about yourself.
Hey, thanks, Scott. Good afternoon, everybody. Devin Fahrner. I'm the regional manager for finance of America Mortgage. I'm also a loan producer. So we've got a couple offices right here in the Treasure Valley and the surrounding area. I am in my 25th year of mortgage lending. Yeah, started when I was 10.
I knew it was a long time. I didn't know it was
Yeah. We do offer some other products, but about 99% of what we do is just residential mortgage lending. And I, perceive myself to be an expert at it. It's all I've ever done, pretty much all I ever plan on doing in my career. And Finance America is a top 10 leading company in the nation. And
wow.
Proud to work for them. Real quality company.
That's great. I know several of your teammates, and you guys are all just class acts. I think a lot of you guys. There's always a question getting a mortgage on a refi or in a home, and people think the first thing they're going to do is run to their local bank, credit union. But you guys are neither that. So why come to someone like you?
Yeah, so legal disclaimer, in answering this question, we are not saying anything about the loan officers that work at banks.
Oh, yeah. There's a lot of great ones.
But like it or not, there are some things that differentiate us. So the first thing is, a lot of people don't know this, but their local bank or credit union, that company may have done a little bit of screening, but as licensed originators under the state licensing, we actually have to do, for myself, about 14 to 15 hours minimum of licensing, continuing ed every single year. That's not required under a federal credit union or bank charter. They just have to be registered, and that's it. We have to submit to more vigorous background checks and pass a national test. These are all things that are required of individually licensed loan officers that aren't required of that. Bank and credit union loan officers may also be working on credit card lending, car loans, boat loans. The people that work for us here, they have 100% one focus, doing mortgage lending. Not all, but most bank and credit union loan officers get to go home at 5 o'clock at night. We do usually, in most average times, about 80% purchase money transactions at my company, which means most of the time we are on 24/7.
Wow.
That doesn't mean we all answer our phone at 3 o'clock in the morning, but it does mean one of the first things I do when I wake up in the morning at 5:15 is check my emails and my text messages. And if I've missed something from a customer, or more importantly, a real estate partner that's trying to get somebody positioned to get them in a home, we are responding right away. We're doing commitment letters at 4 o'clock on a Sunday afternoon. Now, that's not always glorious, and we don't always love it, but that would be probably why one of my referral partners would answer the question, why would you want to go there? So this is a 100% laser-focused area of expertise, not more of a generic lending. And so that's my answer.
Yeah, that's good. That's great. See, I didn't know a lot of those things either. That's great. So right now, I watch the news, and because I'm not an expert in your field at all, I hear all this that lately the Fed's rates are zero.
Yeah.
I don't even comprehend. What does that mean?
Yeah, exactly.
What does that mean to here in the Treasure Valley, Idaho? Someone wants to refi or buy a house.
So that's great. So here's a good real life analogy. Have you also heard about oil lately?
Oh yeah.
And oil about 2 weeks ago actually went into the negative. Okay, so just because it's trading negatively does not mean you get to pull up to the gas station and ask if the gas is free, right? That's the same with the federal funds rate. In other words, it has an influence on mortgage rates similarly to the way that oil would have an impact on gas. But it doesn't mean that it's a direct correlation, right? So the Fed lowers the short-term money that they lend out to the banks and credit unions to make credit card loans, car loans, boat loans, installment loans. It's not a 30-year treasury note. and it's not the same type. It's not the same money that's being lent directly to the consumer. So does it help have a positive impact on rates? Yes, but it's one variable. So we've actually seen scenarios where the Fed lowered the rate. I wrote a blog about 2 years ago that said the Fed lowered rates today and interest rates went up, and why? All the other variables. Sometimes the Fed is doing that to try to stimulate a little bit of a stagnant economy. Sometimes in doing that, Wall Street will respond really positively, and people will flock and put all their money in Wall Street and therefore move money out of bonds and create less demand for them. And then you have to raise those prices. So sometimes it can have an inverse reaction, and sometimes it can kind of prop it up, but it is never the exact same thing.
Right. So that's good. Like I said, because I'm a layman, laywoman, whatever. And I that's great, because like I said, that clarifies that, because I thought it must be a good thing overall.
Yeah.
But
now to clarify, right now rates are really good. They're in the mid to high twos and in the low threes, depending on the borrower. There is no one rate.
Yeah.
Watch out if you're being quoted. Are you being charged, loan discount points or not? But rates are great, but no, they're not zero, and we don't think that we're going to see zero. We'd like to see our economy recover and just have them stay nice and low.
Perfect. Now, one thing that back when I first bought my house, and I've been at 2 homes now, but been a long time. But I know there's a lot of people looking to buy new homes, and what spooks them is you hear you got to have 20% down. What do you have to have 20% down all the time? Because a lot of people just won't look for a house because they think they have to have 20% down. Do they have to?
Yeah, certainly. And what's amazing about that particular question, why it's so good, is with all the innovation we've seen in our market and all the cool products that we have out there, there are still people to this day that still think that, right? And they sit on the sidelines and lose out on this massively awesome appreciating asset, especially in our market, where even through the last major recession, we've still seen like an average of 5% increase year over year over year, even through those really bad times, right?
I just read yesterday that in Ada County, I think it was, that said last April compared to this April, that it went up 11% or so. So I mean, we're very fortunate here in the Treasure Valley, because we just haven't been impacted very much.
Right. And it's easy to brag about the gains, but then even if you go back to look at a house in 2000 right now, and you think we went through the worst recession known to mankind, we've still seen 5% appreciation. So to get back to your question, it's so sad that people wouldn't realize, hey, I could have this $200,000 or $300,000 asset appreciating for me at this nice, healthy percentage rate year after year, because I think I have to save this much up. So the answer is no. The second answer is there's products with combinations of first and seconds or mortgage insurance, and no, mortgage insurance isn't a bad thing. I told an older gentleman one time who'd said mortgage insurance is a scam, and I said, if you allow someone to get in for 5% down, and now they have an asset, the entire asset gets to appreciate at 5%, and they had to pay $150 or $200 a month to not have to have 20% down.
Wow.
And got to benefit from all of this.
Yeah.
Is that a scam? And he kind of gave me this puzzled look, because it was the first time that anybody ever monetized it for him. I had a girl one time that paid $120 a month, which is about $1,500 a year for 2 years. And over that time period, that house appreciated $40,000.
Wow.
You do the math on that for a minute. You asked me if mortgage insurance is a scam.
Yeah, that's the thing. That's why it's great talking to someone like you, because because a lot of times looking from the outside, you can be cynical about things like that, mortgage insurance. But then when you kind of step back and talk to someone like you that's an expert in the field, you look at the big picture, you go, okay, that's not really a bad deal.
Right. And even if you're renting, we like to say you're paying somebody's mortgage payment. It's just not yours.
Yeah. Hey, so it's been great advice, but I always try to really raise your focus on one thing that can really pass on. If someone, some individuals are out there looking, and they, what single piece of advice, doing this for 2 decades plus, would you give someone thinking we want to go out and buy our first house, we want to buy another house? What's the biggest piece of advice you give to somebody looking for a home here in Treasure Valley?
Plan. And here's what I mean by that. First off, you have to find the right loan officer, because if you do just go to a normal place and walk in and say, I have no intent on buying in the next year, if you're not dealing with a very committed mortgage planner, they're going to look at you and maybe be helpful or not.
Right.
However, I have people come in all the time that I've been trying to get to talk to me for the last year. They were looking at the wrong range of pricing. They had no idea the correlation between, you know, what they wanted to buy and what the cost would be. There were things on their credit that we wished we would have talked about a year ago. So we could have said, hey, stop doing that. You know, stop taking out the $500 credit card and maxing it out.
Right.
Get rid of all these little credit cards, get one credit card and use it sparingly. All these bits of advice that we could give them to groom them, to get them in the best possible position. But they're so intimidated. They're thinking, if I go talk to somebody, they're going to be insulted if I'm not a buyer today. Some people, guess what, Scott? I need loans in September. I need loans next February.
Yeah.
So the more people that I can get in the planning stage and doing the right things, not only do I have more loans for me in the future, but I have more people doing the right thing. So they're going to be in the best possible position to buy when that time's right for them. And then it makes my job way easier down the road.
Yeah.
They feel like that they're dealing with somebody that's, you know, cares about them, and they're even more loyal customers.
Yeah, that's great advice because, and you've mentioned this to me before on that point, was that, you know, you wait for the last minute, right? Well, you don't even know what you're looking at, you know.
Right.
You can't afford that $500,000 home. No, yes, you can afford more than a $2,000 home. I mean, $250,000 home easily, right? But a lot of people don't know that. There's so many variables until they come talk to an expert like you or one of your team. Because anyway, that's what you've talked about before, is that people wait for the last second and then, you know, they don't even know how much money they have to be looking. You know, how do you can buy? Why look at a bunch of homes that you can't afford, or a bunch of homes that you really don't want that you can afford better than that? So
a lot of times it's the opposite. Sometimes they're not looking at homes that they can afford because they never realized in a certain program what a good deal we could get them.
Huh? Yeah. Hey, well, that's perfect. Hey, I really, really appreciate it, Devin. And a lot of people might not know this, but if you're a veteran, that's another reason to go to Devin and his team, because Devin's a veteran and appreciate your service. And thank you very much for giving those valuable tips. And thanks a lot. And
yeah, everybody have a great day.
hey, you too. Hey, thanks, everybody. Have a great day. Keep safe.